Dollar Canadian Dollar Daily Forecast, December 9th, FXEmpire.com. The dollar CAD pair skyrocketed during the session on Thursday as the risk-off trade came back into the fray. The Canadian dollar is tied to the high end of the risk spectrum and is highly sensitive to the price of oil, which also fell hard during the session. The oil markets continue to be rocked by the problems in the EU and the economic issues that suggest that perhaps the world is slowing down, both in the EU and the Chinese areas. The risk of contagion out of Europe has people buying U.S. Treasuries, so of course the dollar gains in general anyways. The selling of the commodity markets overall, including the almost $2 drop in the light sweet crude market, as well as a significant drop in the Brent markets, did diminish the demand for the Canadian dollar overall. The pair does look like it's found support at 101 yet again, and perhaps after this bar candle we are suggesting a move back up to about 107 or perhaps 105, somewhere in that range. The 103 level is going to be resistive as well, but since we've sliced through it a couple different times, we think that it will give way much easier this time. It's hard to imagine a scenario where we break down the pair below the 0.99 level, which we see as the bottom of this massive support area, just simply based upon the economic fundamentals around the world. The markets are far too jittery at the moment to think they will be willing to stick their collective necks out there like that, and as a result, we think that any move to the downside is extremely limited and probably just a buying opportunity. Of course, the oil markets will have to be watched, as the 95 level in the light sweet crude contract is one place where we could see action that will lead this pair. If that level gives way, this pair will be running hard to the upside at that point as oil falls apart. The 105 level in the Brent market will also be an area that the Canadian dollar traders will be watching as well, and you should too. The market certainly have plenty to worry about at the moment, and as a result, we prefer to be on the long side of this pair, as the loonie looks vulnerable overall around various markets.